Good morning to Dr. Saiful, Hafiza, Puan Sharifah Farah, and everyone. I'm Chai Jendong with metric number A208522 and represent my basic accounting and finance STQA2223 Group Project. The title of this project is Financial Analysis and Comparison between ALLIANZ Malaysia Berhad 1163 and MANULIFE Holdings Berhad 1058 over the past 3 years, which are 2022, 2023, and 2024. I'm the only group member because of some registration and personal issues. I'll start by introducing the two companies, followed by the top management organization chart, key findings in annual net profit, total assets, total liabilities, and financing of ALLIANZ Malaysia Berhad and MANULIFE Holdings Berhad. Lastly, I will make a comparison between these two companies by using three financial ratios to figure out the more financially healthy company. Let's start by introducing these two companies. The first company is ALLIANZ Malaysia Berhad, AMB. It's under the financial services industry and was established in 2001 in Malaysia. ALLIANZ Malaysia Berhad is an investment holding company that has two wholly owned subsidiaries, which are ALLIANZ Life Insurance Malaysia Berhad and ALLIANZ General Insurance Company Malaysia Berhad. The most exciting thing is that ALLIANZ General Insurance Company Malaysia Berhad is one of the leading general insurers in Malaysia. Next, the second company is MANULIFE Holdings Berhad. It is also under the financial services industry and was established in 1963 in Malaysia. MANULIFE Holdings Berhad has four wholly owned subsidiaries, which are MANULIFE Insurance Berhad, MANULIFE Investment Management Malaysia Berhad, MANULIFE Insurance Laban Limited, and Britama Properties Sdn Berhad. As of 31st December 2024, its assets under management were over 15.8 billion ringgit Malaysia. We will start the analysis by introducing ALLIANZ Malaysia Berhad with the top management organization chart. Sean Wong Wee Keong is the Chief Executive Officer, CEO for 2024 and 2023, where there is no change in this position. The Chief Financial Officer, CFO, is Giulio Slavic for 2024 and 2023, where there is also no change in this position. However, there's a change in the Chief Operations Officer, COO, and Andrew Sim Koksoon succeeded Stephen Reeds as the new Chief Operations Officer, COO, in 2024. Next, the total number of shares is around 179.97 million shares. The top 10 shareholders hold 81.57% of shares, which is around 146.80 million shares, while the other shareholders hold 18.43%, which is approximately 33.17 million shares. The largest shareholder is ALLIANZ Asia Holding Pte Ltd, which holds 64.10% of shares, which is equal to 115.36 million shares. ALLIANZ Malaysia Berhad has three main business activities, which are general insurance, life insurance, and investment holdings. Let's move to the annual net profit overview over the past 3 years from 2022 to 2024. ALLIANZ Malaysia Berhad AMB has a better performance from 2022 to 2024 due to the increase in annual net profit, corresponding to higher insurance revenue over the past 3 years. Next, general insurance revenue is the business activity with the highest revenue over the past 3 years, since ALLIANZ General Insurance Company Malaysia Berhad is one of the leading general insurers in Malaysia. It dominates the total revenue with 49.63%, 48.59%, and 50.18% of total revenue for 2022, 2023, and 2024 respectively. The total assets have increased over the past 3 years in total. The 5 examples of the components of its assets are investments, cash and cash equivalents, reinsurance contract assets, intangible assets, and property, plant, and equipment. Based on the statement of financial position over the past 3 years, the main source of the assets is investments. As of 2024, it dominates the total assets with 88.18%. However, the life insurance business dominates the main source of the assets based on the business activity over the past 3 years, which is 70.32% as of 2024. Besides that, the total liabilities have increased over the past 3 years in total. The four examples of the components of its liabilities are insurance contract liabilities, deferred tax liabilities, reinsurance contract liabilities, and derivative financial liabilities. Based on the statement of financial position over the past 3 years, the main source of liabilities is insurance contract liabilities, which are also known as reserves set aside for future insurance claims in actual terminology. As of 2024, they dominated the total liabilities with 93.64%. However, based on the business activity over the past 3 years, the life insurance business dominates the main source of liabilities, which is 77.05% as of 2024. Then, the type of financing of Allianz Malaysia Berhad AMB over the past 3 years is liability financing. It has the highest percentage of financing, which are 79.54%, 80.17%, and 80.50%, respectively for 2022, 2023, and 2024. It is true to know that Allianz Malaysia Berhad AMB is highly liability-driven due to its insurance business model, where premiums collected create large reserves. It is typical for insurance companies where policyholder obligations outweigh shareholder equity. Next, I will introduce MANULIFE Holdings Berhad with its top management organization chart. Wiba Hamsi Koban is the Chief Executive Officer CEO for 2024 and 2023, where there's no change in this position. The Chief Financial Officer CFO is Ng Chun Nam for 2024 and 2023, where there's also no change in this position. However, there's a change in the Chief Operations Officer COO, and Noor Mahida Che Mahmud succeeded Lee Taffat as the new Chief Operations Officer COO in 2024. The total number of shares is around 224.69 million shares. The top 10 shareholders hold 79.94% of shares, which is around 179.62 million shares, while the other shareholders hold 20.06%, which is approximately 45.07 million shares. The largest holder is MANULIFE Century Holdings Netherlands BV, which holds 62.61% of shares, which is equal to 140.69 million shares. MANULIFE Holdings Berhad has three main business activities, which are asset management, life insurance, and investment holdings. Let's move to the annual net profit overview over the past 3 years from 2022 to 2024. MANULIFE Holdings Berhad has a better performance from 2022 to 2024 due to the increase in annual net profit corresponding to higher insurance revenue over the past 3 years. Next, life insurance revenue is the business activity with the highest revenue over the past 3 years. It dominates the total revenue with 76.75%, 78.27%, and 76.65% of total revenue for 2022, 2023, and 2024 respectively. The total assets have increased over the past 3 years in total. The 5 examples of the components of its assets are financial assets at fair value through other comprehensive income, segregated funds net assets, financial assets at fair value through profit or loss, cash and cash equivalents, and intangible assets. The main source of the assets over the past 3 years is financial assets at fair value through other comprehensive income. It dominates the total assets with 48.79%, 49.08%, and 43.76% of total assets for 2022, 2023, and 2024 respectively. The total liabilities have increased over the past 3 years in total. The 4 examples of the components of its liabilities are insurance contract liabilities, deferred tax liabilities, reinsurance contract liabilities, and segregated funds insurance liabilities. The main source of total liabilities over the past 3 years is insurance contract liabilities, which are also known as reserves set aside for future insurance claims in actuarial terminology. It can be specified to life insurance contract liabilities due to its business activity, and it dominates the total liabilities with 65.06%, 66.58%, and 65.89% of total liabilities for 2022, 2023, and 2024 respectively. Then, the type of financing of MANULIFE Holdings Berhad over the past 3 years is liability financing. It has the highest percentage of financing, which are 82.19%, 82.42%, and 82.22% respectively for 2022, 2023, and 2024. It's true to know that MANULIFE Holdings Berhad is highly liability driven due to its insurance business model, where premiums collected create large reserves. It is typical for insurance companies where policyholder obligations outweigh shareholder equity. In addition to comparing these two companies, I will use three financial ratios, which are return on equity (ROE), net profit margin, and debt to equity ratio for 2024 to determine which company is more financially healthy. Return on equity (ROE) measures the profitability and efficiency of the company in generating profits using its shareholders' equity. A higher ROE indicates better performance in generating returns for investors. Net profit margin measures the amount of net profit a company obtains per dollar of revenue gain. A higher margin means the company is more efficient at converting revenue into actual profit. The debt-to-equity ratio measures the ratio by which a company is financing its assets and operations with debt rather than its equity. A high ratio suggests higher financial risk due to heavy reliance on debt. The higher the return on equity (ROE) and net profit margin, the more financially healthy the company. The lower the debt-to-equity ratio, the more financially healthy the company. The return on equity (ROE) and net profit margin of ALLIANZ Malaysia Berhad (AMB) are 14.10% and 11.88% respectively, while its debt-to-equity ratio is 3.89. MANULIFE Holdings Berhad has a return on equity (ROE) of 8.20% and net profit margin of 16.04%, while its debt-to-equity ratio is 4.62. In conclusion, ALLIANZ Malaysia Berhad (AMB) is more financially healthy if return on equity (ROE) is used only in the assessment. It has a higher return on equity (ROE) than MANULIFE Holdings Berhad. MANULIFE Holdings Berhad is more financially healthy if net profit margin is used only in the assessment. It has a higher net profit margin than ALLIANZ Malaysia Berhad (AMB). ALLIANZ Malaysia Berhad (AMB) is more financially healthy if the debt-to-equity ratio is used only in the assessment. It has a lower debt-to-equity ratio than MANULIFE Holdings Berhad. In short, ALLIANZ Malaysia Berhad (AMB) is more financially healthy if these three financial ratios are used in the assessment. That's all for my presentation. Thank you for your time and attention.